The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and appreciate you listening in. You can give us a call right now with any questions you have at 1-877-927-6648. Again, that's 1-877-927-6648. Well, markets are continuing their decline after the massive drop yesterday. We got the S&P down 7 points. We had the Nasdaq down 26.5 right now. We got the Dow down 50. And the Russell is down a little over 8 points. Gold is up near 90 cents, but has had some huge oscillations today. Some great trade opportunities that have been available. And we got copper is down 1.5% on the day right now. And let's see here. Yeah, we'll get that up. And then let's see, we got silver. It is up almost 0.5% on the day so far. And we have corn down about 1% on the day, down 6 points right now, with soybeans up almost 11 points on the day. We have oil up 31 cents, and we have natural gas. It is down about 0.5%. Euro dollar is down 95 pips. Massive move there. And a great trading opportunity. We talked about all the EU announcements coming out last night and how it would be a great opportunity to go in and do a string of trade, and it definitely worked out. Looking on over at pound dollar, it is up 24 pips. We got the Aussie dollar basically flat on the day, pretty much at unch. If you have a change, it's a mini pip or half pip, whatever you want to call it. And we got U.S. yen is down 69 pips on the day, along with U.S. Canadian up 20 and U.S. franc up 52. Dollar index showing strength across pretty much all the pairs there. And the only one the dollar is really showing weakness against is the U.S. yen. I guess the pound dollar is a little bit of weakness there, too. But the big one, of course, the euro dollar sort of dominates the basket and showing strength to the dollar in the midst of the current market decline. Let's go ahead and take a quick look over at our fundamentals. And let's sort of look at the reports that came out, because these are the ones you need to know about. And, again, learn, log, keep records. So that way you can take advantage of this as these reports came out. We had yesterday we talked about the FOMC meeting minutes trade that we posted it. Not only did I announce it on the radio, we also posted it over in the Tiger's Den. Talked about it yesterday afternoon over on Tommy's show. Worked out great. Made 258%, straddling the Aussie dollar on the FOMC meeting minutes. And trade worked out really well. It basically shot down. We took profit on our short. It popped back up a little bit. We got a break even on our long. And we're able to really maximize profit on the trade. Really no big announcements last night. This morning, however, like I said, as I announced yesterday, we had a lot of EU announcements coming out. We had trade balance coming out of Switzerland, and even though it's not EU, it does, of course, affect the EU. And then we had the French flash manufacturing PMI. And let me go ahead and pull up a chart on euro dollar, and we'll take a bit of a look at that right now. And then we'll zoom on down to a smaller time frame. So 1 second here. And let's see, this is 5 days. Let's go down to 10 minutes. And let us look at the market action from the news last night. And what you can see, the news report started rolling in, like I said, at 3 o'clock on the French manufacturing PMI. Number came in about of expectations. So 2 a.m. Central right here. And didn't see much off the French manufacturing, and that's one of the things I said. Don't expect that to be the big mover. But, it's a good time to get in before that, before things really do start moving. Then a little bit later right here, we start seeing, 220, it starts moving. So you've been good to get in, or 320 there Eastern time. Starts moving. 330 is when the German flash manufacturing comes out. The German flash manufacturing PMI came in at about expectations. No big change there, but the German flash services PMI came in well below expectations. And we started to see that decline in the euro sort of taking off at that point. We go a little bit further on down here at 4 o'clock. in the morning, 3 a.m. Central. Then we had the flash manufacturing PMI overall for the EU and the flash services PMI overall for the EU, and those numbers both also came in negative, only adding to the weakness that was already building up in the euro. And then we had the Spanish 10-year bond auction. That came in at 5.2. That's actually a little bit better than the previous report. And they basically got announced right around 4:43, so 3:43 Central Time. So when that came out, that basically helped it level off, and we didn't see a whole lot of further decline after that point, because that was basically good news out of Spain, that they only had to pay 5.2% in interest rates in the midst of everything that's going on, versus the last time they had to pay 5.29 on their auction. And then Britain's auction, they actually ticked up over on the pound, and up to 2.15, and so we can pull that one up real quick. And what we'll see over here is, first, they had a couple of announcements come out. One, they have the public sector net borrowing. That came out much, much better than expected. It's a medium impact report, but the variance from the expectation was huge. And that got released at 3:30 and 2:30 Central Time, and we saw the pound not only was already taken off a little bit, but it really took off after that report, and really has not looked back. It had a little bit of a crazy move right here, a little bit earlier in the morning around the news from this morning. But overall, it was able to maintain its strength based on that report primarily. And then we're also able to see the 10-year bond auction. Even though the bonds did tick up, that really did not have a negative impact on the pound overall. And we scroll on down, then we have the CBI industrial order production that happened at 6 o'clock, 5 a.m. Eastern. And that number came in much better than expected. That continued to add to the increase in the pound. And so just made it a great day, really, for trading overall on the currencies, overnight, especially. Most of the moves did happen overnight. So if you weren't in, basically you missed out on a lot of the moves if you didn't hop in last night. And so if I go in and look at, we'll pull up the deviations on the charts real quick, and we can show right over here. So that we had like I said, that move it down first, came on down, literally hit the one deviation overnight, and then bounced back and got us a full deviation retracement on the pound. So you had literally a one deviation down and a one deviation up that you could have taken advantage of on the pound dollar, and like I said, made for a great trade for a strangle. And then over on the euro dollar, let's break this down to a little bit shorter time frame. We'll go 10 minutes, and then we'll go over to euro dollar. And we pull that up right now, and then you'll see right here that it was able to move down to currently, where are we? Man, it's really moved down. Let's see here. It moved down to one deviation, sort of oscillated between 1 and 1.5, and basically just playing actually between, I guess, almost 1.5 and 0.7. So it's just been bouncing back and forth between these levels. And but you can see how it literally hit the 0.7 and fell right back down. So very good for helping you trail stops and for good reversal trades. I mean, that's the deviations are for. They're there to help you based on market expectations. This is statistics made easy, is what it is. They'll let you know how far the market expects the market to move and how you can take that into account and basically put it at your advantage when you're trading. Let's see here. Other things we can do is we can pull up and look at, this morning we had gold moving. And even though it's pretty flat on the day right now, it had some nice moves because most of the moves happened last night. Gold went down quite a bit, as you can see, was dropping. Basically, as soon as the gold market closed down right down here and then moved on over. But then it started just literally running up. We got a full 1 point move on the way up. And even this morning, right before the U.S. news here that we had at 8:30, so 7:30 Central, basically, and this would have been, imagine trying to trade this on gold. Let me zoom in and just really show you this. But it's pretty crazy when you start looking at it. Yeah, it's a little cleaner. And you see right here, and all of a sudden, gold drops from the close right there at 1571.2 down to 1565.5. Okay, so that is a massive move. $500-$600 easy. If you had a stop, you're wrong, you probably got hit on the trade. And if you're on Nadex, you didn't get hit on the trade. So because you have a stop loss, but you don't have a stop trade, which means your losses capped. Your losses don't keep growing; they stop growing. But you can be in the trade until expiration until 1:30 on gold if you're trading the dailies, or the intradays is weighed as 1:30, or 1 o'clock on the intradays. And so you're strangling this, straddling it, whatever, and gold shoots on up, moves on, about 12, 13 points up to the high there. So you easily could have done a half deviation up, half deviation down trade, and had a nice profit. And despite this spike down, and even though it did oscillate for a while on you, you gave it about an hour and a half or so, and the market just took off, and had a perfect, great trade. And you could have tightened your stops. Like I said, I could do that on the 10-minute bars. So right here on the bar that closes above it, which is this bar, so these went above it. This bar closed above the deviation levels. And so whenever that happens, you can go in, you can tighten your stop a little bit higher, and actually that's the deviation right there. So right there, you could have went in and tightened the stop up, and it would have pulled back down, would have finally nicked you out right here, except for where the market was closed. So you actually would have got out here when, because Nadex closes, it opens at 6 o'clock, okay? But it closes when the pit closes. So like it closes in gold at 1:30 Eastern time, so it closes at 1:30, but then it reopens at 6 o'clock. So since it would have closed there, even though it came back down, it would have hit your stop, but it didn't because you were actually able to take profit at this point. And, it works very, very well. Like I said, you've gone long. And, or if you just had a strangle on, and ideally you should have taken profit whenever it hits the strike, and you would have probably taken the strike. You should have taken the strike based on, half deviation up, half deviation down. And if you don't have access to the deviations, these deviations are not pivot levels, okay? They are not standard deviations. They're not ATR. What they are is they're diagnostic deviations. We're actually looking at the implied volatility of the underlying market. And implied volatility is a fancy word for expected movement. And what that is, we actually build that price is built into the options. Think of it as like a survey of market sentiment on how far a market's going to move, but not a survey made by phone calls, a survey made by money. So basically people putting money where their mouth is and what they think is going to happen. And that affects the option premium price. And you can extract that implied volatility out. We take 16 different implied volatility numbers and weight them, tie them in, make an index, and then tie it into a deviation. It's create a bell curve formula, if you will. And that basically lets us know how far the market says the market will move on a given day, and at what level should we expect it to pause or oscillate. So, as you can see right here, each time it hits the deviation, it goes up, the level of it hits, and hesitates right there, and then comes back down and hits right here. So stay right there, and we'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, I'm right back here at the Diagnostic Trading Hour. Thanks for coming right back after the commercial break. And we're checking out what else is going on in the market. So we just did a review of basically the fundamentals and how the market has responded to them overnight. And now the next thing is to go in and look at what is coming up next. So we had, we had the existing home sales, of course, as well, and Philly Fed Manufacturing Index. The Treasury decided not to go ahead and step in, despite having an absolutely horrible Philly Fed Manufacturing Index. I was sort of shocked. I was sort of hoping they would, just so we could take advantage of an easy trade. And nonetheless, the market gave plenty of good trades either way. But the Philly Fed Manufacturing Index came in at negative 12.5, but existing home sales came in really positive. And so I think basically they offset each other. So there was no need to make any big difference there. But the unemployment claims come in pretty well below expectations, and they came in at 362,000. And, of course, that's what helped our gold trade do well. Now, looking on down and seeing what else we have going on, we have, crude oil inventories. So that came out at 11 o'clock today. I'll go ahead and pull that chart up. We can review it and see how it's going over here. All right, so got a chart up on the screen, pulling up CL. And you see right here on the crude oil inventory report, right there at the 11 a.m., 10 a.m. Central Time. And the report came in at 4.1 million barrels with an expectation of 1.9 million barrels. This means inventory was higher than expected. And oil basically, went up a little, which was just a bogus move, came on back down a little, and really has done nothing. So this is one of those trades where if you're in this and you're strangling it, and it flies up, okay, and the news says inventory is higher, therefore price should be lower, that means get out of your trade because something is happening that you can't easily figure out. Now, you can figure it out if you dig into the report. You can find the reasons. But, basically the move already happened. It moved overnight right here. As you can see, there was a massive move overnight on oil. And so you really just, whenever that happens, just get out of the trade. The next thing you want to do is go in and check out, let's see, what do we got tonight? Tonight we have the RBA Governor, Stevens, out of Australia. He's going to be speaking at 5:30. That's not a major moving event, so I probably, it's not predictable, readable in any way. Not even predictable. It's not tradable because you don't know. There's not an expectation. So I don't expect there to be anything massive off that. So I wouldn't really suggest anything kind of trade off that one. And then looking over at tomorrow morning, what do we have that's coming up on the docket? And it looks like we have the German IFO business climate report. That'll be coming out. That's a heavy impact report that comes out at 4 a.m. And so that'd be a euro trade for you and possibly a strangle on that trade. And there's not a whole lot of other news. So it's one of those things that you want that to move or not move. And if it's not moving, you want to move on and get out of the trade. However, we do have 4 Canadian announcements coming out at the exact same time. We got a core CPI, a core retail sales, a CPI, and a retail sales number all being released at 8:30 a.m. in the morning. And you could use those to take advantage of a USD CAD strangle, and that'd be or a USD CAD spread, either one. And let's see, so because at 8:30, you could actually take advantage of the dailies or the 2 hours on the spreads or the binaries. So really will give you some good opportunities, like I said, because they'll start at 8 and they'll go to 10. So you can do the 2 hour ones that expire at 10, or you can do the ones that expire at 3, or you can do both. And check those out. But definitely get a USD CAD trade. I would not be surprised to see it move, at least half to 1 deviation. Maybe half deviation like right away, and then it ought to go pretty quiet just because, well, it's Friday. And usually doesn't keep moving all day long, but you want to see movement for about 30 minutes to an hour and a half. And so that, that could make the 10 o'clock trade a good possibility for you. And then a little bit later in the day, we're going to have a couple FOMC members gracing us with their presence. FOMC member Powell is going to be talking at 10:30, and that's expected to be a somewhat market-moving event, but, not so much easily tradable, but just be aware that at 10:30 he's going to open his mouth, and who knows what kind of impact that's going to have. And then rolling on over to the FOMC member Tarula, he is going to be speaking. And let's see here. He's delivered to do a speech, but it's going to be tomorrow night at 6:30. So, obviously that's not going to impact anything because it's after market close. Looking on over and see what we got coming up Saturday. There'll be the Sunday, the Italian parliamentary election. With all of the issues going on with Italy right now, this could definitely have a big impact on the market. So definitely a potential euro-dollar movement. That's day one of the election, not the only day, day one. But we'll talk about that when we get back from the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I think we got the quality audio resolved. And so we'll move on forward from here. All right, so what we were talking about when we last left there with the Italian parliamentary election is going to be starting up, and there'll be the Italian Chamber of Commerce. So if you want to follow along with that, you can always go over to en.camera.it, en.camera.it. And I'll go ahead and I'll post that link over in the den for you as well. So right here. So if you want to follow those parliamentary elections, as if ours aren't enough to follow as it is, but they will, of course, have an impact on everything that's going on. And then looking on and seeing, okay, so we got day one. And then, basically they'll continue to go through until all the results are released. And then the parliamentary election day 2 will come out on, Monday. And let's see, I think that's it. I think they wrap up. But, it's basically a 2-day election process. And they wrap up, and then the results will be released. And so that could be a definite market-moving event. Of course, we still got the fiscal cliff and everything else about to kick in 7 days? So we'll find out how all that's going to go. And then, Tuesday. Let's see, what we got anything else Monday? I was looking for the parliamentary election. Monday, that's pretty much it. Besides G20 meetings. These guys can't meet enough, can they? Maybe they can actually come up with a solution. Nah, maybe not. But anyway, so looking on over what else we got. Switzerland's going to have their employment number come on out at 3:15 on Tuesday morning. And then we'll go into Federal Chairman Bernanke is going to grace us with his presence. And we always appreciate that because that means strangle gold. And, appreciate him for helping you make some money in the process because when he talks, he messes things up. So he'll be doing his little, testimony thing at the Monetary Policy Report before the Senate Banking Committee in D.C. And so as that information comes out, that could have a definite impact. Also, new home sales will be released. That can be a good copper mover, by the way. So new home sales, especially new home permits more than anything. New home permits, new home construction, because that's, hey, they have to start buying copper and everything else. So it could be a good copper moving trade for doing something like a strangle on a binary, possibly straddle on a spread if the risk reward lines up. And let's see, we also have CB consumer confidence coming out at the exact same time. So let's go ahead and look at a few different things real quick and check out, to sort of scroll through the markets here, what we got. We got the S&P. Let me pull it up right now. We can look at our deviations. We dropped down to a 0.5, almost to a 0.7, but just hanging out really. 0.5 deviation right now. I mean, just a scalper's dream right here. Just come back and enjoy it. Then we got over here, we got the Dow going on. So on the Dow futures, and they have actually decided to move a little bit stronger. Let me zoom in, make it easier for you to see this. And you'll see right here, moved on down 0.5, 0.7, and then 1 deviations down. And right there on the marker, you can see that it did move down to a 1 deviation level. And now it's just hanging out at the 1 deviation marker. If we go on over to the Russell, then you can see it moved down to 0.5, 0.7, almost 1. I mean, you're talking within a few ticks before pulling on back, and would have let you really capture a majority of the move riding the Russell down just by using the deviations when they break, when a 10-minute bar breaks through, just using it as a stop. And then finally, we got our Nadex. So we'll go ahead and check out the NQ market. And we can see that move down very strong, solid 1 deviation move down, still not out of that trade. So with our stop right here, we have not hit it. And so who knows if that's going to keep moving down or not, but, or if you want to take profit, whatever. But right now, doing pretty well and could set up for a nice trade. Now, going in and checking out, that's NASDAQ. We want to pull up, look at a couple of our commodities. So we can pull up oil like we talked about earlier. And that moved down 1, and then I'm down to 1.5 deviations. So if you were trading that, and now this would be pre-inventory report, so you need to be getting out one way or another right here, just because of the news. It did not hit the deviation or close below it, but with that right there, you literally need to be getting out of the trade because the report's coming out. So don't stay in when an inventory report's coming out. All right, that's just asking to get hammered, and. Then we got the, the natural gas contract, and we got just a whole lot of nothing, really, when it comes right down to it. Coming out of natural gas, this really was not, let's look at this, I got some spikes that would have killed you. But beyond that, just not a lot of happening right there in natural gas. And then looking on over at a few other markets, we can check out, our currencies. Let's check out our corn and our soybeans real quick. So I'll go ahead and pull those up. And on corn and soybeans, we saw some decent moves. It pulled on back down, basically pulled about a deviation, pulled back down to the deviation level. And then over on soybeans, we also saw a decent move where it pulled down overnight, but then pulled back up. So basically the inverse of corn in this case. And hopping on over to a couple currency pairs, then what we can see right here is that this one moved on down to 1 deviation, almost to 1.5 before pulling back. And euro dollar looks pretty cooked and done. And if we go over and check out the Aussie dollar, and we can see that it moved down, actually touched half a deviation, like to the tick, just a couple ticks right there, and pulled back up to settlement, and then is now sort of in a swing trade mode, back and forth. And now we go over, we can check out the pound dollar as well. And like I said, that was just a perfect move. I think we talked about this a little bit earlier. But you not only had that massive spike yesterday, I mean, just an insane, you look at this thing right here, and just a huge, huge move. but I mean 10 minutes. So that's just, I mean, there's some crazy moves going on. This stuff right here, when you see these kind of bars, this should scare you. Okay, this should make you go, and you see these bars on all sorts of instruments. You see them on stocks, you see them on futures, you see them on forex. Those big bars are the bars that can make you a lot or wipe you out. Okay, so on those big bars, what you need to be having is thinking about, hey, how can I not get killed if I'm in the wrong direction on this and it drops? Okay, well, the way that you can not get killed on it is you can go in and you can trade Nadex. And, there's a couple of those bars that happened. And, I mean, even right here, this massive up-down move. But, I mean, high to low over here, we got a high of 52.75, a low of 51.89. I mean, you're just asking for trouble. So, if you want to avoid that kind of trouble and you want to never get stopped out again, hop on over to tfnn.com, click on the Nadex banner, and then at least sign up for a demo account. And if you're trading these things, just place the trade side by side with it, okay, on the demo account. Username, first name, last name, phone number, email address. Click apply for demo. Once you've done that, click create account, and then click start. And basically it's 5 minutes from start to funded, and you'll be able to live trade if you want to for as little as $10, $20, $30, $40, $50 a trade. It's only $100 to fund an account. There's no platform fees. There's no data fees. There's no commissions. They have exchange fees, but the exchange fees are less than what you'd pay for like on the CME or something like that. And so like per contract. And CME would be like, say, $1.16 or $1.14, whatever it is right now with CME and NFA fees. Nadex is 90 cents a side. And so versus like, $2.28 a side, or $2.28 round turn. So $1.80 round turn on Nadex. Here's the beautiful thing is it actually caps at $9. So if you go in and do 10, 20, 50 contracts, no matter what, okay, like per order, you're paying $9. So if you do 1, you're paying 90 cents. You do 5, you're paying $4.50. You do 10, you're paying $9. You do 30, you're paying $9. You do 100, you're paying $9. That adds up. So any of you who have traded any kind of size, and size doesn't have to be, by the way, necessarily huge, but if you've traded any size at all, you know that can make a big difference. Because it's not just what you make, it's what you keep in trading. And I like to keep all the fees I can in my own pocket, not in someone else's. And so, check it out. And the next step is you're going to want to learn about how to trade this. So hop on over here, sign up for our 2-week free trial, okay? There's no charge to your credit card during that 2-week trial at all. And so take advantage of it. And then at the end of it, of course, it'll keep you going. If you want to keep going, it'll keep going. And, let us know what you want to do on that. But 2 weeks, get access to the videos, the binary education, the spread education, get access to the Y-spread analyzer, get access to the deviations. And again, the deviations, you can use these no matter what you're doing. You can use them. If you're just a futures or forex trader, you can use them. And they get uploaded every night. And I have the front and back month futures accounts, futures contracts in there. I have the forex spot markets in there. I have the forex futures markets in there. And so you can go and get access to those right away. And they easily alone pay for the service. If nothing else, that by themselves, they're worth the value of the entire service. So you get access to that, and you can ask me all the questions you want about Nadex, and I'd be happy to help you out. And basically get a head start. We also have another Nadex conference coming up here outside of San Fran, going out to Cali, and so we're going to have a pretty cool little free conference out there. We'll have details up on the site pretty soon with all the information for registration on that, and you can take advantage of that to learn even more. And we've had a great event. We had recently in Denver. We had one before that in Tampa. So, and then we're going to go out to California. So basically going coast to coast. And want to help as many people as possible to learn about Nadex. I was in New York. I talked about this yesterday. I was in New York, and I was speaking about Nadex. They asked me to come in and be a guest speaker there. And, most people hadn't even heard about it. They didn't know about it. But once they stopped for a second and heard me lay out, like, this is how the spreads work, people were they were very excited. They're like, wow. They saw the impact this could have on their own trading. Many of the challenges they faced as a trader could actually be resolved through using the Nadex spreads. And the binaries, they're a whole different story, but they're a lot of fun if you know how to trade them. You use statistics to trade them correctly. The spreads are just like you trade now. And there's a couple small variances, but they're so small and the benefits are insanely massive. And so if you have any questions, please, let me know. I'd be happy to help you. And if you have some, preliminary questions you want to know, but if you sign up for the 2-week free trial, you get access to the help desk right there. But if you sign up for the 2-week free trial, you can get it right in there. Even not, feel free to, on the contributor page, you can get my contact by email, and feel free to email me with any questions you have. I'd like to hear from you. And let's see. So we got that going on, and it's it's pretty exciting. But like I said, you'll be able to get these right here, and that's where I'm pulling all this information from. I'm talking about every day to you, and I'm using it every day when I trade. But so we got like the Nadex markets built in, spot markets. We got the index futures, the energy futures, the metal futures, the ag futures, the forex futures. So all that built in now, and we can make it really easy to even tell you what the symbols are in like a Ninja Trader or a Thinkorswim format. Basically with the the numeric code like ZC03-13 or ZCH3. So you're not having to try to dissect all that and figure out what it means. We make it real easy. But and then you get the spread scanner. You can go in and check this out as well. All right, so that gives us a summary on that. The next thing we're going to do is go in and look at a couple more pieces on Nadex, and I just want to sort of review the platform, teach you a few tips that you may hopefully find beneficial, so you can go in and take advantage. So let me pull that up right now. So as soon as you log in, you're going to get access to the, or if you sign up over there, you'll get access to the demo platform. And there's a couple things that I think you may find helpful that most traders don't know about, and but really are glad they find out about whenever I teach them this. First thing is, go in here to My Account, okay? And then under the Settings tab, then what you'll want to do is click on Preferences. Under Preferences, tell it to allow multiple ticket panels. Just make sure that's checked and then click Set Preferences. Once that's done, you can then close the window. And now, when you place a trade, so we could go over here, let's say we're placing a trade right here, we could go in and we could open more than one ticket at the same time. Good, sort of hidden behind there. So more than one ticket at the same time on Nadex. And that's very, very helpful. Most people don't know you can do that. You're going to want to turn that on. Now, something else you can do with the tickets is you can click the drop-down arrow and click Tear Off Ticket. And this lets you actually take the ticket outside of the browser window. And this can be great for, let's say you're sort of doing a trailing stop. And so you could have this just sort of sitting out there, and you're waiting on the market to maybe come back and hit your price or whatever before you get out, because you're trying to maximize the profits. And like I have a trade over here on the euro dollar, looking at a short right now, we're trailing this down. And had a little divergence, a couple other things that lined up. We're doing a reversal. So on this trade, I'm trailing it down right now, and so I can have the out-of-ticket window sitting out over here ready for me to hit it and get out. So I don't have to go searching for the position or anything else, and I don't have to put it in just a pending order. I have that sitting right there. And I'm talking about more for spreads than anything for doing the trailing stops. So that's a really helpful feature. For learning about how these spreads work, there's a lot of pieces you can take advantage of in here. But those are just a couple quick tips for you, so I hope they help you out. And stay tuned. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just going through a few tips and tricks on the Nadex platform. And so we talked about out-of-ticket window. One of the things I actually like to do now is go over here to the underlying indicative, and they'll actually show you the currency pairs. They can show you currency because it's over-the-counter, it's not exchange. And so they're actually able to give you the quotes on it, which is nice. I mean, I usually use a different platform for my actual quotes. But what you can do is you can go and you can add all these to your watch list. So you just go right here and go to Add to Watch List. And once you've done that, I mean, it takes literally, as you see, a few seconds here. Okay? Now you can go up here to your watch list, and you can choose My Watch List. Then you'll have all the currency pairs. The next trick is to go in, and where it has View as List, choose View as Pairs. And so you can also resize the window to make it fit a little bit more. So, especially if you're an FX trader, you're used to looking at things like this. And so now you can actually see the FX quotes happening on the platform there. And so that's sort of nice. It's like basically one easy place to see it. And I actually set my watch list as that. So that way, as the FX pairs, because the other stuff changes all the time, but obviously the FX don't. So by putting that on there, you have to worry about adding stuff every time. So it's a lot more effective use of the watch list. And then over here, a couple other things for you. So if we go back over to, say, the tickets, and I'll pull up, say, a spread on 415. and not really placing a trade so much as just showing you. Okay, so if I went in and let's just say I bought, we'll just say this contract right here. So I go in and I buy it, and then I hit place order on the trade. Once I've done that, now under open positions, this is a demo account, by the way, so you can tell by it's light blue and it has the word demo on the top. Then what I can do right here is shrink this down. Everything I zoomed in a little bit to make it easier for you to see. And I can click on the green arrow next to it. It'll open, so remember I bought it, right? +1. So I can now actually put in an order to take profit in advance by just clicking on the green arrow, and it'll link them so it won't charge me extra margin when I do that. So now I can go over here and I can say, okay, I want you to sell this out at 1500, and then hit place order. So I bought it 1497.9, sell at 1500. When it gets to 1500, if it gets to 1500, then the S&P 500 E-mini futures, then it'll close out the trade for me automatically, and so I don't have to sit there and babysit the thing all day long. Now I do, obviously I like to maximize my profits, which does mean I need to be there, but, it's also good to have in like, hey, where would I like to take profit at realistically? What's my ultimate goal? Put that one in there. You can always go in, and this is, sort of expanding on the last step, is under working orders, you can go in and you can always amend the size, you can amend the price. So, I could, I want to go ahead and move that up to 1501 and hit amend order. Or, I can go over and say, I want to go ahead and move that up a little bit further. And maybe I want to move it down. I want to take profit a little sooner, so I want to go down at 14.99, and I can do that and hit amend order. Or maybe I'm back to my computer now. I went to take a quick break. I wanted to take profit just in case it did go up, but now that I'm back and watching it, I'm going to go ahead and cancel that out. And so now I'm ready to go ahead and in this case now I may do a tear-off ticket. Okay. Now if I do a tear-off ticket from an open position, I need to make sure okay, I'm long, so I need to sell. And then, put my size in. And then what I can do is I can click on the market price at any given time to update the market price immediately. And so whenever I'm ready, now I may not do it right now. I may wait, obviously, until it gets higher. But click on that button, hit place order. And that's basically how you put on a new position, you set a take profit, and you amend an order on the Nadex platform. I hope you all have a great day, and good luck in trading out there. And stay tuned. We have another great show coming up for you. I will see you tomorrow.